Hey guys, this is Alan Moore, certified financial planner and founder of Serenity Financial Consulting. Thanks for joining me. So have you ever thought about buying an annuity? Has a financial salesman ever tried to sell you one? Annuities in their simplest form are essentially an insurance policy against you outliving your money. So again, in its simplest form, you give money in a lump sum to an insurance company, and in return they send you a monthly check for the rest of your life. And notice I said simplest because annuities come in a lot of different shapes and sizes, and so there's no way to even begin to summarize all of them in even a series of videos. But that's kind of the essential ingredient of an annuity. You give the insurance company money, they send you a check every month for the rest of your life. So in many ways, it sounds like a great idea. They've been demonized by a lot of the financial press for good reason, and so although it does make sense for some clients to use annuities to help reach their financial goals, the devil is in the details. So here are a few things to consider before going out and purchasing an annuity. The first thing is know the person who's recommending the annuity to you. So financial salesmen that are typically the ones that are pushing annuities get paid on commission, which means that they only get paid whenever you purchase a product. So this puts you in a conflict with the way that they get paid. So they're not interested necessarily in doing what's best for you. They're interested in pushing a product that's going to, basically make their income. So financial salesmen are held to what's called a suitability standard, not a fiduciary standard. A suitability standard means that the product needs to be suitable to the person buying it, but it does not have to be the best product for them. For instance, let's say that the annuity salesman has two annuities that they can sell you. One has a 4% guaranteed rate of return, but it only gives them a 5% commission. Or another one that only has a 3% guaranteed return, but it gives them a 10% commission. They can push the 3% guaranteed return product and not even tell you about the 4% because it's better for them. Their fiduciary standard is actually to the company that they work for. So they have to do what's in the best interest of their company, not you. So it's just important to know that they're not working for you, they're trying to sell you something. On the flip side, if you have a financial planner that is also managing your investments, they generally get paid on assets under management, which basically means they get a percentage of all of your investments that they're managing. Well, if you try and turn half of that portfolio into an annuity, you're cutting the amount that they're managing by half and essentially cutting their fees in half. So in that lies a conflict of interest because you're basically asking them to recommend something that's going to cut their income. So now a fee-only advisor is held to a fiduciary standard. They're legally obligated to do what's in your best interest, but it is still important to know that the conflicts of interest exist. And with things like annuities, it can be really tough to be sure that you're getting the full story. The next thing is whether or not they're trying to sell you an annuity in your IRA. So one of the big benefits to a lot of annuity products is that they allow for tax-deferred growth, which basically means it can grow and you don't have to pay taxes on it every year. Well, that's wonderful, except that the IRA money is already tax-deferred. So purchasing an annuity inside of an IRA doesn't make any sense because you're getting this, basically you're doubling up on a benefit that you can't double. So you can think of this as when it starts to rain, you walk into your house and you open an umbrella and stand under it inside your house to stay twice as dry. It doesn't work. If you're inside the house, you're probably not getting wet anyway. The reason that they're sold inside of IRAs most of the time is because that's where most Americans have their retirement savings. So either they roll the 401k into their IRA or that's where they've been saving. This is a big red flag. So if someone's really pushing for it inside the IRA, walk away, consult with another advisor, see if you're getting the same story from both of them. It doesn't mean it's always bad, and sometimes it could make sense to get an annuity in your IRA, but usually not. The final thing is know the fees. So annuities come, again, in all shapes and sizes, and every benefit and bell and whistle that you buy has a fee attached to it. So in its most simple form, you're going to be paying a commission to the to the salesman, whoever sells it to you. It doesn't necessarily mean you're going to be stroking them a check. It's going to basically be deducted from the amount that you're going to be getting every month. You'll never see it. But they're going to get paid, and there's charges for the actual administration of the annuity, and Again, every rider, every guaranteed benefit has a fee. I one time saw a client come in, they had an annuity with a 3% guaranteed minimum. And then they actually purchased another 2% guaranteed rate of return. So they thought they were getting 5% every year on the annuity. Well, the interesting thing was that the 2% guarantee was costing them 2%. So it netted out. So instead of getting the 5%, they're really only getting the original 3%. And this is an extreme example. You don't see this kind of stuff very often, but it certainly happens. If you have a complex annuity, variable annuity, then the mutual funds that's held within the annuity are going to have their own management fees. And many times these are actually higher within the annuity than outside the annuity for the exact same fund, which is kind of interesting. Overall, you can expect to pay in excess of 2%, even for a basic annuity per year, depending on the product, but the fees can run pretty high. So overall, what does this all mean? I don't think annuities are bad, despite what Susie Orman says. If you're a watcher of hers, you know that she believes annuities are pretty much evil. I think that they can be good, useful tools sometimes, but not all the time, and not for most of the people that they're sold to, unfortunately. For the clients that I have recommended annuities, usually just a stripped down, basic, fixed, immediate annuity has made the most sense. Maybe inflation protected annuity would make sense. But there's a lot that goes into that decision, so that's certainly not a recommendation for you to go out and buy one. If you're having questions about an annuity or someone's trying to sell you one, I would get on either NAPFA.org or the GarrettPlanningNetwork.com. Check those places out and find an advisor because they'll be able to help you kind of walk through the process. I'm a member of both, so full disclosure, just so you know that, but I'm a member for the same reason that I recommend them to you to go find an advisor, is because they're required to do what's in your best interest, and it's the easiest way to kind of refer you to a network of trustworthy advisors. So overall, what do you think? Has anybody ever tried to sell you an annuity? Have you ever thought about buying one? One of the interesting things I didn't note was that in Wisconsin, you actually have 30 days to back out of an annuity contract. So if you've recently been sold one, or you signed on the dotted line and aren't too sure, you can actually back out within the next 30 days. Some states are only 10 days. So that's all I have for today. Thanks so much for joining me.